morning, everybody. Good afternoon. Thank you for joining our Home Express Mortgage Corp broker webinar, Non-QM Made Easy, how to turn a no into a yes. My name is Andrea Formato, and I am the corporate trainer here at Home Express. Thank you for joining. We're really excited to have you all here today. Quickly before we begin, I would like to share our disclaimer for the group. The content of this presentation is proprietary and confidential information of Home Express Mortgage Corp. It is not intended to be distributed to third parties not participating in this webinar without the written consent of Home Express Mortgage Corp. And we thank you for your cooperation. We have a very full agenda today. We're very excited to share with you why Home Express can make it easy for you to turn a no into a yes for your non-QM borrowers. We're going to get going here in just a couple of moments. This group is on mute, so if you have any questions, please feel free to type them into the chat box. We will try to get to all of the questions in the chat on the call today. If by some chance we don't get to your question, we will go ahead and take it as a takeaway and reply to you. When this call is completed, we will be sending out a link with the recording and the PowerPoint. So everybody will get a copy of this when the call is over. Also, before we get started, I'd like to welcome our presenters today. Again, as I mentioned, my name is Andrea Formato. I am the corporate trainer here for sales. We also have Ray Menina here, who is our SVP, Head of National Production. And our presenter today will be David Greiner, who is the VP of Sales for our Western Division. Before we get going with David, I'd like to turn it over to Ray to say a couple of words.
Yes, good morning, everyone. Good afternoon to those in the East Coast. Welcome to our maiden voyage of ongoing webinars that Home Express Mortgage will be presenting each month. Home Express started in 2015 as a specialized non-QM wholesale firm dedicated to serving mortgage brokers. The company was founded by former executives of Fremont Investment and Loan who truly understand non-traditional loans and are committed to serving borrowers and investors with unique situations and are unable to qualify for a traditional agency or government loan. Now, we're proud of our growth from a startup to one of the top 3 non-QM firms nationwide based on volume. Much of this growth is attributed to market demand for non-traditional products. However, we've also accelerated to the top of our peer group due to our no-nonsense underwriting approach, our industry-leading pricing, and our enterprise-wide focus on speed, ease, and convenience. Today, as Andrea mentioned, our presenter will be David Greiner, who is our Vice President of the Western U.S. and really one of the pioneers of non-QM loans. He'll walk you through some of the unique characteristics of non-QM loans and, more importantly, how to turn a no into a yes. Without further ado, David Greiner.
Hey, thank you, Ray. It's a pleasure to have this webinar with all that attended here, and hope you enjoy this and it'll be insightful for you. And just a few words before we start going into it. I was reading through MBA, and the loan originations next year is going to be off by $1 trillion. You know, I got a degree in accounting, but so I know that's a large number. And how do we get that? How do you capture more business? And as I go through these slides, I'm going to hopefully show you how you can turn some no's and yeses that you see and have seen in the past that maybe you weren't aware of that you could accomplish and get those loans funded. So with that, Andre, let's go ahead and move forward with the webinar. To kind of put it in perspective, I decided to go back to the early years of non-QM and kind of show you how it started and why it makes sense today. And it started with just a handful of companies that started in early days of non-QM. I've been doing non-QM since 2015. There's a few companies that started before that. And as we started launching this, of course, we did a lot of market research. And there was a big void for certain type of borrowers that didn't fit the agency guidelines. And we looked at him and go, wow, this guy's got $1 million in the bank, great credit, but he's self-employed, and you got these tax returns that didn't fit the DTI. And you go, why didn't this loan make sense? The loan does make sense. But on the early side, we had to get a track record for investors and for ultimately the bondholders. So I'm going to go through this, back there to where we're at today. Back in 2015, borrowers had limited lender choices. There are only a handful of true non-QM wholesale lenders out there. Again, there was really no guideline exception. Kind of had guidelines out there that had to fit the box, and excessive condition, double underwrites, and kind of confusing from getting a DU or LP approval to this manual underwrite PDF thing that comes out to you. It's kind of like archaic, going back to 1990s or something like that. So then also the spread of the rates were a lot different. It was not heard of in 2015, 2016. Rates on non-QM were 7.5, even 8, right? And it was hard for brokers to understand, hey, this is a manual underwrite. It's kind of new coming out, and those that did it and got it done are really excelling in non-QM today. And I hope that's part of you goal here as you head into 2022. It's going to give you some examples of some changes of guidelines back then. We did bank statement loans, which everyone, that's non-QM. Well, we required 24 months with a CPA or enrolled agent P&L along with that. Wow. The max loan to values when we started out was 85% on a purchase. And by the way, you had to have a 720 plus score. So it was limited on the product offerings. And again, that's partly to get a track record, right? So if you have a track record, you have performance, then you can get more acceptability to the bondholders that ultimately that need their interest payments made. So as we go through that, we've gone through this 2015, and it was actually expanding towards 2019 and 20, and then COVID hit, right? So now I'm going to go on the next slide, kind of see where we're at today. So if you could change the next slide. Non-QM today. I'm going to tell you, it is widely accepted now. In my role at this company, I get a lot of calls that come in from the Western U.S. And to be honest with you, a lot of borrowers call us because they know that it's accepted out there and they can get loans done. And so make sure you have this product offering. So borrowers are aware it's now widely accepted. There is multiple lender choices for borrowers, right, of going into this non-QM. There's probably, 50 that say they do non-QM out there, or even more that are getting into it, right? Non-QM day has fewer conditions, and I'll go through some of those. We allow guideline exceptions now, right? So the other big thing on non-QM today is the spread of the rates from agency to non-QM. It's now down to maybe 150 basis points when it used to be 400, right? Because you got wider acceptance on Wall Street to buy these and aggregate them and securitize them. So I think this now is a time for you really to get into this non-QM field because we do make it easier for you. So I'm going to go through some of these programs that we have to make it easy for you to take that no into a yes when you looked at it didn't fit agency or jumbo prime. Bank statement programs. Most of the ones we do are 12 months, right? So that's available. So you shrink the number of bank statements you need from the borrower going back and forth. The other thing we've added is the income up front. We have an income desk for you that gives you an answer within 24 hours or less. So it's not an unknown factor when you have this application on your desk. We simplified expense factor. On the business bank statements, it's 50%. You still can get a tax repair letter for a lower expense factor, right? So all these things are making it easier for you to do business in the non-QM space. We also have a 12-month cash flow program. What the heck is that? That's for the borrower that's less than 2 years self-employed, right? This is typically like a doctor at Kaiser, right? He's W-2 and starts his own practice, and he's 16 months in. He's got he took his patients and built that up. Those are good loans. They usually have great credit, great money down, and they're in the same line of work. We can say yes to that borrower. You say, I got to be 2 years self-employed. Well, not necessarily, right? So these are some things that you could have come across your desk that you can check that no into a yes. Let's go to the next program on non-QM. Expanded income doc options, right? How many times you looked at, I got to average these 2 years tax returns and it doesn't work. I wish I could just use 2020 tax returns because you made so much money that, yes, you can. You can use that with Home Express and some other non-QM lenders. We have no tax returns on a lot of our full doc or 1-year full doc programs, just W-2s, K-1s only. We have 1099 programs. And then we also have our asset program. So we can have someone that's heavy in asset. I see a lot. I live in the Silicon Valley area with some of the tech individuals that are computer engineers that work for Google, Facebook, then they do take other assignments. They have a lot of stock, right? So you can take that value stock and you can pass ATR with that, and we can say yes to that borrower. We also use asset to supplement monthly income. So if you have a higher DTI, we can look at those assets and have it qualify. We do lease agreements in lieu of Schedule E, and we also have P&L programs, P&L only, or P&L with a few months bank statements to get you the right LTV you need for that particular borrower in their scenario. So that's going to allow you to turn more of those no's. You don't know what to do. Yes, you can, and you just need to reach out to us, which you'll see at the end of how to contact us. Let's go to the next slide. Non-owner occ business purpose made easy. As everybody's aware, beginning of, was it this year, last year, agency was limiting the number of percent of volume they have on non-owner occupied and second homes. And this product could really just blossom this year with in non-QM. So how do we make it easy for you, right? This is how we do. You have we're going to qualify this loan based on the cash flow of that particular property. DSCR stands for debt service coverage ratio, right? We don't need the lease agreements on it. We're going to go by the 1007 if it's SFR, 1025 if it's units, right? That's all you need. So there's not a lot of documentation you need on that. We have programs with DSCR below 0.75. It does affect LTV and pricing, but we have options for you to still get those down if they're below 0.75 on the coverage ratio. The other thing of a guideline change to make it easier for you on these, on their VOMs, we only require the subject property and the primary residence. We will look at the credit report items, but you don't have to get all these canceled checks from these private parties. I know that's been a kind of a pain in the past, you're doing these loans. I mean, because this segment, from like 07, 08 to 2015 was not there. They all had to go private money because they just got told no, right? I own 12 rental properties with mortgages on. What agency says no? Well, we say yes to those. We also can do short-term rental properties on this program. That's your Vrbo, your Airbnb. That's okay. They still qualify. Foreign nationals are okay. Again, unlimited property zone, and we can do up to 10 loans for that same borrower up to $4 million. This is going to open a lot of avenues for you, and there's some great rates on this. I think the starting rate on this with us is 3.99, 30-year fix. So there's some great programs and that you can get more borrowers in, because if they're doing private party, that's going to be a little bit higher rate with points. Sometimes they're balloon notes, and we're offering 30-year fixed. So which is awesome for you guys. Some of the expanded programs that we have in the non-QM space, loan to value is 90% now for your purchase transactions, 100% gift funds on up to 80% loan to value. We have flexible first-time home buyer guidelines. What does that mean? Well, here's what it means. When you look at loans, there's a lot of people, and I was young once going to buy a house, might have stayed with a relative, mom or dad. I'm going to live there, so I don't have a housing, but I'm saving my money to purchase my first house. A lot of times that was no bank. We got to have housing history. But that's actually probably a good financial decision if they save up their own money and they make educated decision on what they want to do for their lives. And they did that. We're okay with that. We will get that loan done for you in those cases with no housing, but they're living with a relative and they're saving their money for their down payment. That makes sense to us. Short-term rentals, kind of touched on that a little bit on the non-owner occupied. We also have ITIN programs, right? That's your individual tax identification number, and that's a growing segment in non-QM as well. And those are the ones that are here, but may not have the Social Security card, but they have a government form ID. They've been here 20 years, and they've been sold no for so long. We have programs for those. Non-permanent resident aliens are here usually on a work visa. And we also have loan amounts increased. Back in 2015, it was like $1 million max. Now it's 3 million. Other lenders are doing up to 4 or even more than that on some of the jumbo non-QM or jumbo prime stuff. So this is all good news where you can close more borrowers that you see. I got to talk to you a little bit about our support staff, right? Of what we're going to do to help you say yes more. We have non-producing sales managers. What's that mean? You got to have a really good AE with us that's connected to your loan officer or to the broker. We do 2 weeks full training with mentorship for the first 90 days. Then we have non-producing sales managers. So if AE has any questions, you can get an answer right away. We have responsive operations staff. We have dedicated operation managers that help you navigate through that file with the underwrite and get it CTC'd and get the docs out, right? Our doc department is one fantastic. Once you get through, I kind of go through life of loan with us. Loan gets submitted in with your AE. We have this portal that is great. It's on here too, that you can interface with us by uploading the credit and bank statements over through your own portal, not emailing it. So we're sensitive to this non-public information, okay? Then it goes to disclosure. We disclose usually same day, so disclosures go out. Then it goes to underwriting. Underwriting's 48 to 72 hours, and then get your conditions in, and they get reviewed within 24, 48 hours, and it gets the doc department. Doc department's 24 hours, and we fund on scan docs, so you can have a really good experience with us. A couple things too, we underwrite our own guidelines. There is no second sign with us. We fund with our own money, and with that, we have the ability to make exceptions with compensating factors. So what's all this mean to you? We have one of the highest pull-through percentages in the industry, well over 60%, which is kind of unheard of on the agency world, right? Because borrowers go, they might not buy the house, this kind of things happen, but we get those loans closed that come in. Why Home Express? Well, we're a top 3 non-QM wholesale lender in the nation, right? We funded over $1.2 billion alone in 2021. That's coming after the pandemic when we had to shut down for a couple of months when we had zero pipeline, and we're already funded $1.2 billion this year. We have industry-leading turn times. I put it in, we care. I mean, I got into this business not just because of Home Express or that, but I saw a segment of borrowers that were underserved that I know are good loans, and they had to pay these high rates to private parties that now can come to us and get a decent rate and be able to get their lives moving, whether it's a refinance, whether it's a new purchase to move their family ahead. That's why I'm here, to help those borrowers out. The XConnect portal, I mean, I think as you see the non-QM go, you're really going to call us you know, a fintech type of company that specializes in non-QM, because we believe that's the future with this, right? Is that we need to get more technology to make it easier for the borrowers to get their loans completed. So you'll see a lot of fintech ideas come from us and put it out there. You have that with our XConnect. We got some other things coming behind that to really do it, to really help you out with that. Exception to guide. Just tell us the story. That's always so. Tell us the story. We're here to help people move along with their financial situation and get them in the homes that they need for their family. So pleased with that. Again, speed, ease, and convenience has been our motto since day one, and you really see it with us. We have seasoned sales managers, and you're going to have access to our ops team. We're here to close your loans and take your no's that you see on your desk and turn them into yes. So let's go to the next slide, and hopefully you guys have a lot of questions that will pop in here. So you can ask me any question you want, non-QM industry, Home Express, programs, those type of things.
Hey, David, it's Andrea. Thank you so much. We do have one question, and it said, will this qualify for condotels?
Presently, we don't have a program for condotels. It's a different one, but it's on our credit committee item to look at in the future.
Okay, great. And we do have a hand raised, but again, we're on mute. So if you do have a question, please put it in the questions or the chat. And I'm just looking, I don't see anything just quite at this moment, but maybe we'll give everybody another moment, David, and I can move to the contact information screen.
Okay, well, you can see our thing up here, our website, homexmortgage.com. Lots of access there to get approved, to reach out to us. We're here, we're very responsive. So you have a loan scenario, you want to talk to us a little bit about non-QM and what that means for you and how you can market that. Our A's are good at helping you market for non-QM borrowers.
Okay, another question came up, David. Do we have a bank statement desk?
We do have an income desk. That's what the bank statement desk is, right? So all you do, you don't have to calculate all that. We're going to make it easier. Just supply us the 12-month bank statements. We'll upload those and have an underwriter look at that and give you an answer on that income that we can use for your approval within 24 hours.
And then another question came up. What is the highest LTV that we can do on a purchase loan? I think we went over this in the slide, but please answer.
The highest LTV in a purchase transaction for a consumer loan is 90% at the moment. So need 10% down.
Okay, great. Another question came up. Will I be able to get a copy of this deck? The answer is yes, you will. We'll be sending this out.
Yeah, let's go ahead and.
Well, awesome. I thank you guys for attending, right? Now I have Ray kind of do some closing remarks, but here's our contact, Ray, Senior Vice President of National Production. You have my name, my number here. I love taking calls. I just love what we do here and how we help. And as you go into 2022, I'm gonna tell you, you need to have this part of your marketing is non-QM and get this down. So the sooner you get kind of more accustomed to it, and talk to one of our account executives, you're going to be well off go there. This segment, because of COVID, with a lot of borrowers have switched jobs. There's some that went W-2 to 1099. There's a lot of things that you can say, I can't do it. No, agency can't do it. Non-QM can be the answer for you to close more loans next year. With that, I'll get to Ray.
Yeah, David, we had a couple more questions pop up. So I'm going to go ahead and read them off to you. Need more information on expanded program. So first-time home buyer can do DSCR.
Talking about first-time home buyers on DSCR, so that's the non-owner occupied. Generally, those are tough to get done. There's cases where I could see us doing it because we can make acceptable. That would be a guideline exception. And for instance, I live in Silicon Valley near San Francisco, right? I could see a doctor that rents a flat in San Francisco for, $8,000-9,000 a month. Man, I got my portfolio going and I'd like to get part of my portfolio into real estate. Okay, so he's got 30% down and wants to buy a rental in Stockton or outside of Sacramento. Could I see that case? Yes, I could see that case. So I'm not saying, we don't really say no, just tell us the situation and we can look at that loan.
Great, thank you. Next question. Do you allow for dual compensation?
Yes, on our Investor X program, that's our non-owner occupied. Those are non-TRID. That means they go really fast, right? So there's no LE, there's no CD, there's no intent to proceed, right? And we do allow our broker partners dual compensate, so you can on those. So you can go borrower paid and lender paid on those transactions.
Great, thank you. Next question. Can you please share the guidelines for all of your products?
We can give you kind of snippets of it. Again, this is proprietary to Home Express and our capital partner, SEER, right? So we're wholly owned subsidiary of SEER Capital, which is a big hedge fund on Wall Street, and also our partner here when we started out doing loans. So that is there. Can we give you some abbreviated? Yes, we can, but we can't give you our total guideline.
Yeah, if you look at our website as well, we do have a matrix for our products, so it gives you a snapshot of the product guidelines as well.
Great. Next question. How much can you charge on DSCR and owner-occupied loans?
Up to 5% compensation, total compensation. That can be a combination of borrower paid and lender paid.
Great. So we have another comment. I have several scenarios that I would like to talk to you about. So David, what would you suggest for next steps on how to get in contact for those scenarios?
You can email me directly. That's dgreiter@homexmortgage.com. I also have my phone number up there. I'll take your calls today, 408-603-5671. Love to hear about your scenarios.
Great, thank you. I think we might have answered this one. Where are the guidelines for ITIN and where can we find them? So the website matrix.
Also, their AE can help out, right?
Yes. You can email AE.
Or contact Ryder directly.
Yes, perfect.
Yeah, contact me directly and I'll get you a AE that's well experienced in our programs, and they're going to help you out and help you go through the guidelines and in particular your scenario, right? So we look at every loan individually on its own merits, right? So please keep that in mind. We're a true lender. We lend with our own money. There's our own guidelines. So there's a lot of things you think of, hey man, I can't do it. It doesn't fit the guide. No, call us. Call us. We want to know your scenarios and help you out to navigate that no into a yes.
Great, thank you. And we have a handful of questions, so get ready, here we go. I love it, I love it. Can you combine W-2 income and self-employed bank statement income?
Yes, you can. I'm going to say a lot of yeses here. You can have multiple streams of income, right? So I can have a W-2 borrower that's got a business that they own. So if you're running two separate income streams, generally need 2 years of that. But they got 2 years of that, of being W-2 and running a business. We can use both those streams of income.
Great, thank you. Do you have to be a broker or can I work directly for Home Express here in Florida?
Good question. We're a wholesale lender. There are types of loans, like especially the business purpose, that you do not have to have a broker license. So I'd like for you to send me an email and I can connect you with somebody there in Florida, specifically if you want to do non-owner occupied business purpose loans.
Thank you. Can you use the primary wage earners FICA?
Great question. Yes. We got a couple of different programs when it comes to consumer loans, right? So it's really the consumer loans you're talking about that are income generated. On our Primex, this is I call the jumbo fallout or agency fallout because they got really great rates. Rates start there at 3 3.125% on 30-year fix. All borrowers got to qualify for the program. It means they got to have a 640 score minimum, but we use the primary earners FICO score for program and pricing. So that could really help you out. Then we have kind of our traditional non-QM program called CoreX, and we just use the primary earner score. The COBAR score could be 500, doesn't matter. We use the primary earner score on that program.
Great. On the DSCR, can the property be vacant? If so, what would the LTV be?
That's another good question. Generally, we don't lend on vacant properties, but I'd still ask you, why is it vacant, right? Maybe they rehabbed it. Is it now, did they rehab it to get market rents and now they have it listed out there in the marketplace for a renter? I could see that case being done. But generally, if it's just vacant, that's could be a problem for our investors. What if they don't have someone who's taking care of it? What about vandalism? So we have a common sense approach to it. So does that scenario, why is it vacant, would be my question. That's only on a refinance. Of course, a purchase could be vacant, right? So that's only on a refinance.
Great. Do you expect the number of self-employed borrowers to increase over the next 5 years?
I do. I think with some of the age groups we have, I think they like this work at home or do different things. You know, I just tell you a story. My wife works for kind of a tech company here in Silicon Valley, and they have a lot of just want to be contractors. I only want to be 1099 because I'll take this job, and they sign contracts for 6 months. So there is a movement for individuals that want to have more control of their jobs and where they work and those type of things. So I think you'll see a lot more self-employed on the, especially the 1099 contractor type of positions. So absolutely.
Great. I need more info on expanded programs. So first-time home buyer can do DSCR. I think we covered that one.
Okay.
Can we do a DSCR loan with under 1%?
Yes, you can have under a 1. It could actually, I phrase it as under 0.75. Again, it's to make sense. Why is it under 1? Why do they want to have a property as a rental with a negative cash flow? We understand that there's individuals that might buy a home for appreciation purposes in Menlo Park. Okay, there's no way that's ever going to DSCR on SFR, right? It's a $2.5 million home. They're buying it for appreciation. It's near Facebook and Google. We get that. You only can rent it out for $6,000, $7,000 a month. They're putting 30% down, so you're going to be at 0.6 DSCR. Got it? As long as we understand it, we have a program for you. The DSCR might be 0.6, but we now understand it. That makes sense. Or diversifying their portfolio, basically having some real estate with appreciation. So we do have programs below 1.
Thank you. What if you are renting out rooms in your house? Can I use that as income?
Maybe. I'm going to say maybe. I'm going to tell you kind of my opinion on it. If they've done it historically, and I have a 2-year look back on it, I'd say yes. The problem with room rents typically is they're very short term, and they don't stay. They're only there for 2 months ago. But if they have historic room rents, I'm okay with it. So just kind of make sure it's historic. It didn't throw somebody in there that qualify.
Great, thank you. Do we have any marketing materials available?
Yes, we do.
Yes,
We're
we
going
do.
to have you're going to contact us, and we'll get you with an account executive that's going to provide you with a lot of marketing material.
Yeah. Does Home Express allow lender paid comp?
Yes, we do have lender paid. You know, through our broker approval, right now we have lender paid up to 2%. So yes, we do.
Great. Is there a matrix? Yes, I think we already addressed that on our website. Do you have any integration with POS or LOS? So yes, fine.
Integration mean from your system to ours? No, we will still need your MISMO files to upload into our system. So we don't match up the LOS systems with our broker base right now. I think as we go forward with technology, there's going to be a lot of that going back and forth. How do we make it easier and have the processing smoother from a technology standpoint? Like I say, we're going to head towards a fintech style and have specialize in non-QM, but really kind of more the fintech way of doing business.
We did roll out a new portal just recently, also called XConnect. So I invite you guys to contact your account executive so they can explain the features of the portal and how we can help process your file even faster.
Great, thank you. Can you lend to a borrower who only owns 50% of the business?
Great question. We can lend to a borrower that owns 25% of the business. Our definition of self-employed is the same as Fannie Mae, 25% ownership or more. And then you can qualify on bank statements. We'll take a percentage of those business bank statements being 25%, but absolutely, it's a yes with us.
This next one is kind of specific, David. Do you do refi to lower interest rate on SFR? Owner has FICO over 720. Have 24-month bank statement, need 80% LTV. So maybe that's a reach out to you, email.
Yeah, reach out to me. I mean, that's a winner with us right there. You got the parameters. I got a historical data on their business or their bank statements. Good FICO, 80 LTV all day long. So that's a yes.
Awesome. Great. Well, thank you. Well, that is all the questions that we have. We were going to go ahead and wrap it up. And Ray, I will turn it over to you.
Yes. Thank you very much, David and Andrea. And I hope everyone has a better understanding of non-QM loans and how it can apply to your customer base. As mentioned earlier, these webinars will occur monthly. So feel free to join us each month and invite any colleagues who you think may benefit from these information sessions. I'd like to thank all of our loyal customers who continue to use Home Express as our primary non-QM lender. And we humbly invite those of you who are not currently partnering with us to join us. To learn more or to apply, please visit our website at www.homexmortgage.com. Thank you, everyone.
Thank you so much, David. Thank you, Ray. Thanks, everyone, for joining. Like I mentioned, we'll send out the materials later on today or tomorrow, so please be on the lookout. If you have any questions, don't hesitate to reach out to us. Thank you so much and have a great day. Bye-bye.